Hi there, it's Bill with Smart Trades. It's Thursday, August 11th, around 12:45 p.m. Pacific Time, and let's take a look at the S&P here. This is the chart that I posted on Sunday, I believe. It was my last report here on YouTube. As I said then, I think it's very difficult on YouTube and doing reports once a week to really keep up with a market like this. So if you would like more frequent updates, please visit smarttrades.com. If you do want the Twitter feed, please sign up for this subscription. And I do live updates pretty much every day, even throughout the day. And just on that note, on my report on the 9th, I said we should get a corrective bounce up into the 1170, 1220 area. We had very strong breadth divergences at that time. And, so far so good on that. We're up to about 1185 on the S&P as I speak. At any rate, here's the count. This count I actually did post on Sunday. Obviously, the wave 3, assuming this count is correct, has extended somewhat. Let's go into a little more detail. This is a chart I posted earlier today, both on Twitter and in my newsletter. And you can see we've rallied quite a bit from here. We're at 1186. This was posted, obviously, when the market was about 1146. And the target areas for this rally are up around the 1190 area. And then up to about possibly the 1215, 1220 area. I think if we get through 1220 and breadth remains very strong, I would suggest to you that possibly we've got something else in the works. That said, a failure, particularly in this 1190, 1200 area, you've got an A equals C on the S&P cash, and also previous fourth wave resistance. Up to 1220. 1220 is still the previous fourth wave resistance. The assumption here in the bearish count is that this is a wave 4, and that basically we should keel over here fairly quickly. Now, here's an alternate count. I actually posted this. I've been posting this throughout the week for my clients, and in this count, which actually was posted as well on Sunday, we still have an A down, a triangle B wave, and from there an extended C wave. In fact, we just about nailed the 2.62 times A on the lows a couple days ago on the cash. I believe the low is 1101, and I think the 2.62 times A comes in just about at 1100. So it's certainly possible that even though this wave C is extended, that we are still into this a corrective pattern. My assumption is if this is a corrective pattern, that it's just part of a much larger pattern, and that indeed we may go higher sideways and then eventually even lower, even assuming that this is a corrective decline. In other words, that this big A, B, C is just A of a larger corrective decline. I'm going to get into that a little later at some future date, because at this point, to me, it's not exactly clear what's going on in terms of that big picture. And again, it's very possible that we have a major top, and let's go back to that in fact, this is a peak, and that this is just, we've just got 1, 2, 3 of a 5-wave structure of a much larger decline down. Here again is the S&P cash. This is assuming the more bullish scenario. Again, here's that triangle B wave ending. You can count pretty distinct 5 waves down here. I don't have them labeled, but it's 1, 2, 3, 4, and then 5 of C. 2.62 times A, or 2.618 if you prefer, times A comes in just about on the lows on the 9th. And from there, it's possible to count this as a 1-2 low. And again, this was posted some time ago when we were about at 1149.98, obviously. Here we are on the Qs. Interesting to note, and again, let's assume for prudence sake that we are into a third wave decline. If that is the case, The 5380 area is going to be very important for the Qs. That's where a corrective bounce probably is going to terminate. Here's a little more detail on that. Instead of counting this as a 1-2, you can count it as an ABC. And again, that would target in an A equals C type scenario the 5380, 54 area for the QQQ. Here's the Nasdaq futures, the NQ, same kind of pattern basically. Obviously you've got the overnight trading there, and in that case 2240 would be the likely target to my way of thinking, given the amount of extension that we've gotten today. But it is not beyond the realm of possibility that we could terminate somewhat lower. There's 2190 is the one of the areas I'm looking at, and 0.62 times A comes in actually a little lower than that. Right now we're about 2173, so indeed I believe we hit that, or very close to hitting that 2190 area on today's highs. So I would be alert here for the possibility that this is indeed an ABC and not a bottom, and that's my first order of business. Back to the idea that this is a correction. I've posted this chart before. You can see here very clearly we have, I think what best counts as corrective declines in the Dow Jones China Broad Market Index. Here's copper. Again, very clearly, at least to this point, I think this best counts as A, B, C. Nice long tail on the doji there. The Euro FX. I think this chart's kind of a mess, to be honest, but I think that it probably best counts as a corrective decline. You have a possible impulse up, ABC down, and so you have a possible 1-2 off a corrective low. I think that favors stocks as well. Gold. This chart is a bit dated. However, I believe we are still holding around that 1755 area. That's the apex to this triangle. If indeed gold is good still, at least on a short-term basis, it should hold this previous fourth wave. I'm not even going to bother labeling it at this point. Gold has been so strong. That said, this previous fourth wave support should hold. That's down to about 1722 or so, assuming that we are still in an uptrend. If we start to break through 1722 or show corrective rallies that fail to make new highs, I would consider the bearish side on gold. Crude oil has gone far deeper than I originally thought, obviously following the stock market and economic weakness reports and so on and so forth lower. Off of the low, we have what I think best counts as a corrective rally. That said, we are finding some support in this 80-81 area. That's the previous low of the B wave from 2010. You've got, again, a nice long tail on a doji type of pattern. You don't have quite equivalent opening and closes, but to my way of thinking, the essence, the idea of a doji is that your opening and close are similar, and with this long tail, I think that's potentially it's supportive. I'm not going to call it bullish because, again, the short-term pattern does look corrective. By the way, one last thing on crude oil, pardon me. Next resistance is going to be about 90. If it rallies through there, it's 100. We're kind of on the even numbers here, the even factors of 10, finding support at 80, and then resistance at 90, and again at 100. The short-term resistance is probably around 85 or so. Natural gas. Broke out of a little channel finally, probably finding resistance in this 415, 425 area, maybe 422. I think if we break through there, that would be bullish. Also, if we were to get a corrective decline that held above the recent lows, I think that's around 394. I think that would also be potentially bullish. I'd at least take a look at it. And finally, I'm going to just review some of the stuff I did post on Twitter. Again, if you do want to get the live Twitter feed, please subscribe to my newsletter at smarttrades.com, or at minimum send me an email, bill@smarttrades.com, and apply to Twitter. I may offer a free day at some point That said, here's what I posted this morning. And again, here's that rally off of the lows on the 9th. You have from there what I think clearly counts as an ABC. And again, I posted this earlier today when the Nasdaq was at 2085. Right now it's around 2170. And you can see the count. If you know anything about Elliott wave, whether this is an A up or a 1 up, the decline that I counted here was a corrective one, A, B, C of wave 2. And obviously we have taken off from that low. Apple, same count, slightly different variation in that you have a possible 1, 2, 1, 2. And again, there's that ABC pattern. And we were, when I posted this, at around 369.69. And finally, this is something else that I posted. I do a little trading tutorials there, and this is like a little mini fractal. If you'll notice that we did have that larger corrective pattern in the Nasdaq, and on the very short-term charts you had right off of the opening what I felt was a corrective pattern, and then even a smaller fractal variation of that same basic corrective pattern when the Qs were down around 5180 at the time of this pattern. Obviously we rallied out of there. We've rallied since this chart was posted. And if you'd like these updates, visit me at smarttrades.com. I really appreciate you watching. Hope you're having a great day and a good trading week. Thanks again. Bye-bye.